Hello, everyone. We are back. Today, we will be talking about Celsius. Celsius, what is happening? What should you be aware of? And most importantly, how can you protect yourself against this crazy unwinding that is happening? So, first, we will cover what is Celsius. We will cover their practices, why they stopped withdrawing user funds, and then we will cover what this means for the greater crypto space. And most importantly, how can you protect yourself against what is happening? So, first, the intro. Let's go. All right, so Celsius. What is Celsius? Celsius advertised themselves as a bank. Well, they're not quite a bank. They did have this hilarious number 1866 hodl now. Uh, no comment there. Anyways, so what are they? Well, they kind of advertise themselves as a savings account where you can earn interest on your crypto, and they advertise themselves as a bank, but really they operate much more like a hedge fund or a trading desk. And the problem is Celsius is very degen, like you and I might be. However, that is not what you want from your bank that's offering you a safe yield. So a lot of their strategies were very risky. And then well, because of these semi-risky strategies, it can become an issue when a lot of users try to withdraw their funds. So Celsius, we know you might have used the app, you might have heard of them. They are very comparable to something like BlockFi or Nexo, or the kind of the next in line, if you will, but more just direct competition. So one of the biggest issues with Celsius when it came out is that they hold your funds. So I have this excerpt here from their terms and conditions. So in the event that Celsius becomes bankrupt, enters liquidation, or otherwise unable to repay its obligations, any eligible digital assets used in the earn service or as collateral under the borrow service may not be recoverable. And you may not have any legal remedies or rights in connection with Celsius's obligations to you other than your rights as a creditor of Celsius under any applicable law. So what does this mean? Well, if Celsius goes bankrupt, like it looks like they might be going that way, well, if you have any funds on Celsius, you do not have access, you do not have any rights. Why is this scary? Well, Celsius is pausing all withdrawals, swap, and transfers between accounts. Acting in the interest of our community and is our top priority. Our operations continue, and we will continue to share information with the community. So, this is the creepy part. Pausing withdrawals. Why is it so scary? Well, as we know, if they pause withdrawals or if they go bankrupt, you do not have access to your funds. So I have already tweeted about this a couple times, but not your keys, not your coins. Celsius is, again, every cycle needs a reminder of this, but Celsius seems to be the one reminding us this time, not your keys, not your coins. So why are they pausing withdrawals? How did we get to this? Well, as I mentioned, Celsius acts a bit more like a trading desk rather than just a bank that earns you interest. Celsius lost quite a bit of money, 120 million in the MakerDAO hack. So they admit to losses. It doesn't mean they lost all of this, but they did lose something with the MakerDAO hack, and then they lost with the UST DPEG. Celsius was offering around between 10 and we can see around here if we can scroll and you can find what they offer. But essentially they were offering around 10% interest. So if you go to earn, seems they have taken most of this information down. Great. So they were offering right around 9% interest on your stable coins, which is pretty high compared to something like Aave or any other earning. Yeah, it's making me open an account. Not going to do that. No way. So what they would do is they would take your money that you would deposit into this earn side, and they would look for better deals in DeFi. The problem is, well, they deposited a huge amount of stablecoins into UST, into Anchor, because Anchor was paying out 20%. So Celsius would pay you the 9%, and they would pocket the extra 9 or 10% from Anchor, which seemed like a really good deal. However, not when Anchor crashed and UST depegged. So Celsius did lose quite a bit of money, though they were some of the first to sell. So even though they did lose money on the depeg, they were kind of the first to exit, letting kind of retail holding the bag. Moving on, we had more issues with Celsius. Right now, the biggest issue is how much they manage versus how much they owe, because we can actually see here there are about 10 billion in customer assets in Celsius, and there's only about 1.5 billion accounted for in all their wallets. So I actually have all their wallets kind of here put together. We can see the 1.5 billion from the Celsius wallets. There's a total of 15 wallets that we've been able to find. And well, we can see that if there's 10 billion in user funds, but there's only 1.5 in assets, then there's a big discrepancy. And that is partly why they've paused all withdrawals. So when they're pausing withdrawals, it means that they do not have enough backing in order to match all of the users trying to exit. So you can compare this Celsius crash or unwinding as a bit of a bank run. Because Celsius was using these funds for various things, Celsius tied up their funds like they did with UST or something else. And then if users are all trying to exit, then Celsius has to unwind their positions in order to allow users to get their money back. Now, one of the biggest issues was the wrapped Bitcoin leverage in Maker protocol. So this position faces liquidation back then, 2 days ago, at 22,000 Bitcoin price. They would be liquidated almost of 128 million DAI debt that they had. So this is the largest individual debt position on Maker. However, lucky enough for us, they have been paying back. So they've been paying back the liquidation, and now it is at a much safer level. Once this loads, I can show you that the liquidation level is now at 14K. So the price of Bitcoin would have to drop another 35% for Celsius to be liquidated off that high level or that high loan. However, one of the issues is that they have actually not necessarily been paying back the DAI. They've just been adding collateral, which is a little bit shady because you're not paying off your loan, you're just adding collateral to that loan. So we can actually watch the history here of what they've been doing, and we can see they actually did start to pay back some DAI. They've paid back around right around 50 million DAI, but we can see that really they've been depositing wrapped Bitcoin into that vault pretty much since June 11th. They first withdrew and then they started depositing back, and they deposited quite a bit of Bitcoin. We can see almost 5,000, 6,000 Bitcoin was deposited, 6,500, another 500. So almost 7,000 Bitcoin between June 11th and June 13th were deposited into this vault just to manage that risk. So now we can see they've started to pay back a little bit yesterday, and that is why their liquidation level has gone down. I've been watching this liquidation price because as Bitcoin was going down, this liquidation price was getting very close, and then they paid off a bit. Well, they didn't pay, they added collateral, and it went down to right around 20K, and then it went down to 18K. So currently 14K would be considered safe. However, ideally what we want to see is Celsius paying back a lot more, because they've only paid back 50 million out of their 280 million loan. So let's see what happens. Now, this is essentially what has been happening with Celsius, but let's kind of take it back a minute and kind of see why all this happened. Well, as I mentioned, Celsius operates a lot more like a hedge fund versus a bank. So when you deposit your money, they take your money and they use it in DeFi to find the best strategies or find different strategies where they can make money and pay you your interest while also pocketing some of the overhead. The issue is that a lot of these strategies in DeFi require you to lock up your funds. And one of the biggest strategies is actually Lido. What is Lido? Well, Lido allows you to stake your Ethereum and earn a nice 4% APR on your Ethereum. The issue with Lido is that if you lock up your Ethereum, it doesn't allow you to withdraw it because Ethereum 2.0 is not live yet. So if you withdraw your Ethereum, you actually have an issue with you can't. You literally cannot withdraw your Ethereum. And that is why we have this pair, a trading pair between staked ETH and Ethereum. And that is what we have to monitor now, because Lido has a lot of locked up Ethereum in staked ETH, trying to earn that 4% that Lido is giving you by staking ETH. However, all Ethereum is locked in the staked ETH contract. You have it relatively liquid, and staked ETH operates very similar to normal Ethereum and DeFi, where you could borrow against it, you can use it to trade, and so on. However, if you suddenly need to pay back all these people that might have deposited their Ethereum in Celsius, you cannot pay them back with staked ETH because they deposited Ethereum. So one of the biggest issues is that Celsius might have to sell a big chunk of staked ETH in order to regain their initial liquidity of Ethereum in order to pay back all of these people. And again, that goes back to why all these withdrawals have been paused. So a possible trade coming up is when Celsius sells out and most likely takes a big haircut on the one-to-one from staked ETH to ETH, then there will be a big price discrepancy and you can possibly arbitrage. So let's understand staked ETH a little bit more. Staked ETH represents pretty straightforward staked Ethereum. However, it is not a peg. It represents one Ethereum. When Ethereum 2.0 goes live, Ethereum becomes a proof of stake, you will be able to redeem one staked ETH for one Ethereum. So if you were to catch a huge discount here on staked ETH, for example, and get 30% discount. So if you bought, one staked ETH for 70 cent, like 0.70 versus a 0.9, you're getting a 30% discount on staked ETH versus Ethereum. So it's a really great discount if you don't care about holding it until Ethereum goes live. The issue right now is that because staked ETH is a lot less liquid than normal Ethereum, then a lot of users that need liquidity just need to exit staked ETH. If you don't care about the long run and you don't mind waiting 1, 2, 3 years until you can actually exchange your staked ETH for Ethereum on chain, then this is a good trade for you, because not only are you earning that 4% that we mentioned, but you're also earning that 30 or 10 or 5% from the discounted staked ETH that you bought. So the issue with Celsius, going back to it, is that they need the liquidity. So they're being forced to sell at a loss in order to pay back some of these people that are asking for their money. So this has been a rundown, a little bit of Celsius on their biggest issues. And as it kind of just wrapping it all again, Celsius was operating with users' funds trying to make more money. The issue is that a lot of their strategies force them to lock up funds, like this wrapped Bitcoin vault, like the staked ETH on Lido. So all of these different strategies forced Celsius to lock up funds. And then when you have some type of bank run, then they cannot pay back any of those funds because, as we know, liquid, they only have right around 1.5 billion. And as we can see, that is not enough. Definitely not enough for what people might be asking for when they try to get their funds. So we can see that there is some staked Ethereum here. We can see that there's definitely quite a bit of Ethereum here, right around 37 million worth of Ethereum. So until Celsius has enough net worth in these wallets, they probably have a couple more wallets, but the biggest issue, as I've mentioned, is that they technically owe 10 billion in customer assets, and we have only found 1.5 billion accounted for in the customer assets. So until Celsius solves that, then you have this big issue of not having enough money to pay your debt or to pay your responsibilities. What does this mean for the greater crypto market? Well, one of the biggest issues is that, as I mentioned, if Celsius has to sell a bunch of staked ETH, then the price difference on staked ETH will definitely be going down a lot. Next, you have them with their Oasis on MakerDAO with their liquidation. This has relatively calmed down unless we get a huge pullback on Bitcoin. Before, it looked very likely that they were going to get liquidated. However, now they've kind of behaved a little bit more, and this liquidation price is quite a bit safer. So, so far they've been managing their positions. We are still yet to see what comes next and how they will continue to develop. So if Celsius were to get liquidated from a lot of their positions that they actively manage, then that would be a huge amount of money that the crypto market would have to absorb from Celsius. So again, what does that mean for you? Well, you have to be managing or looking at Celsius's movements overall, especially if they have to suddenly sell a bunch. But so far, it looks like they have managed this, and there will be no immediate liquidations. So let's see how this develops. We will keep tracking Celsius. Again, if you have more questions, hop into Discord. We're happy to answer your questions in the Burb Nest. There's a free trial in the comments, probably a couple 7-day trial. You can ask questions. Otherwise, look us up on Twitter. King Julian and I am on Twitter. Look up the Burb Nest on Twitter. We will be covering Celsius. We will be covering all of these questions that are arising in the crypto market. So if you guys have any questions, do hop into our social media channels. And I am very happy to answer all your questions. So I'll see you guys around for the next video. Peace.